Hi, everyone. Welcome to your latest Carson's Glass Half Full. Ryan and Sonu here. Sonu, we're going to dig into the economy, and that's the big question this week. How's the economy doing? You know, you and I look at a lot of data. We can give good news. We can give bad news. We can give something down the middle. Give me some good news. Let's start with some good news, Sonu. How is that economy doing from the good point of view? Then I want your concerns also.
The economy is doing fine.
Good.
And if you look at nominal GDP growth, which is actually what matters for profits and revenues, and that's essentially what we talk about all the time. Stock market. Stock market's driven by profits. Where do profits come from? From income and consumption, and that's what comes. GDP tracks. Nominal GDP is growing around 6% a year, annualized pace. That is well above the 2010 to 2019 trend of 4%. Right. We can get into how much of that is real growth, productivity growth and things like that versus inflation. But, as we've already talked about, one company's inflation or yours and my inflation is another company's margin expansion, profit growth. Right. So the economy is doing fine. And there's a reason why we're at or close to record highs in the stock market.
Well, you're right. I'll chime in. So we're putting the finishing touches on earnings season. Won't talk any specific names here just to keep this kind of nice and broad base. But Sonu, there's 11 S&P 500 sectors. Yes, technology is the largest. And you could argue, maybe not the most important, but very, very important. Technology had great earnings, yes. But 10 out of 11 sectors had positive year-over-year earnings growth in the second quarter. All 11 had positive revenue growth, okay? We're looking at over this quarter FactSet data. Over 50% year-over-year earnings growth in the second quarter. This time, let's call it 5 weeks ago when earnings season started, expected to be up about 23%. So earnings came in way better than expected. Profit margins are still really solid and revenue strong. And it's not just tech. It's not just AI. Yes, that's been a big part of it. But you've got, banks did really well. Hotels did really well. Airlines did really well on the aggregate. All in all, what corporate America did was impressive. But even what I like, and turn to you in a second, Sonu, is what they had to say about the future. They said, hey, the consumer's pretty darn good. Yes, you could always find cracks out there. But overall, the consumer, who is 70%, give or take, of the U.S. economy, we want that consumer to improve. What else are you watching on the economic front there, Sonu?
The single best indicator to gauge the health of the consumer is probably the unemployment rate.
Okay.
That fell to 4.1% in July. Right? That's the lowest in a year. Right? Last year, this time, we were getting a little worried about the labor market. The unemployment rate by October, November had increased to 4.5%. But since then, it's been tracking lower. Yes, monthly payroll growth, how many jobs the economy is creating, that's looking shaky once again. There's a lot of noise around that. But I would argue, look, these payroll data that we get month after month after month come from something called the Establishment Survey.
Yeah.
Right. The Bureau of Labor Statistics every month. It is one of the largest surveys out there. And it is larger than anything the private sector does as well. But orders of magnitude higher. So the BLS, Bureau of Labor Statistics, probably surveys about 120, 150,000 businesses across 600,000 locations. That's a lot, right? But it is a survey, which means there's a confidence interval. Now, the economy historically over the last couple of decades probably needed to create maybe 100 to 150,000 jobs a month to keep up with population growth, to keep the unemployment rate from going up, right? Right now, because we've had a lot of low immigration, that break-even payroll growth number is probably closer somewhere between 0 and 50,000. But that means there's a lot of noise, right? If the confidence interval on these payroll growth data is about 120,000, you can get several months when we have a negative number. That's what we just saw in July. Yeah. That doesn't mean things are looking, shaky for the labor market or anything like that. That is why when you get a lot of noise like that, focus on the number, the headline number that is important, that is historically, told us what the economy is, about. That's the unemployment rate. Like I said, it's at 4.1%. That's a
Yeah,
good point.
layering on, we get something every Thursday morning called initial jobless claims. It has been, I mean, we had the lowest number since I think 1969 or
Yep.
1967. Just recently, it's still down around 200,000 approximately. That's really, really low. So, hey, listen, there are cracks out there. Yes, I mean, we have higher yields. We've talked about this before. That's really done a number on the housing market. The housing market is virtually frozen. I mean, it's struggling. But the overall aggregate, whether it be a business investment or consumption or residential investment, there's areas that are still pretty darn solid out there overall. One other one I like to look at, Sonu, and I know you dig into this too. The New York Fed comes out every quarter and kind of does an update on kind of the state of households with debit and credit. And we'll keep this real high level and simple. The number of foreclosures, right, in U.S. households the second quarter actually went down from the first quarter. The number of overall how many people are late with delinquencies paying, potential debt, that went down for the second quarter in a row just recently. And there are clearly parts of the economy that are struggling, yes. But when you see things like that, it's like, oh, they don't tell you about that on TV, do they? There are some potential positives out there. And then again, hopefully people listen to this or in this camp. There's been so much wealth created because of what the stock market's done, virtually doubled since the start of 2023. Housing market's obviously done really well also. So there's a lot of wealth that's out there. There's a lot of people. There are more millionaires if you look like 401ks and different investments than ever in history, right? So again, things aren't perfect, but there's a lot of good stuff out there. What's maybe we've talked about it, but what's a worry of yours about the economy here, Sonu?
I mean, inflation and higher yields. We just got the consumer price index for today. Once you take out, look, energy and food tend to be volatile. It does matter. But once you take those out, the core inflation, core consumer price index, that's running, in July, it increased at an annualized pace of about 2.6%. Over the last year, it's running about 2.5%. That's not 2%. And now, historically, the metric, a broader metric of inflation is the personal consumption expenditures index, the PCE index. That's the one the Fed likes to focus on because it's broader. It can get revised as well. And that is actually running slightly harder, probably closer to 3%.
Right.
Right. And now this goes back to what I was talking about with nominal GDP growth. Out of 6%, more than half of that is probably inflation. Right. The rest of it, real growth, from productivity growth, all of that is running below trend, maybe about 2 to 2.5% thereabouts, right? But like I said, what matters is that overall nominal GDP growth is running above trend, 5 to 6%. That's good for the stock market.
Well said there. We could go on and on this. Overall, the economy. And again, in one word, would you say economy's okay? What would you say in one word? What's the economy?
It's doing fine. 2 words.
Well, that's 2 words, Sonu, but yeah, fine. We're doing fine. There we go. Yeah. Okay, so I mean, listen, we love doing these every single week, the glass half fulls. There's positives, negatives, but like you mentioned, I think most people watching this are more kind of interested in how's the stock market doing. I mean, we're hitting like all-time highs practically the second we're doing this, up 13, 14% for the year on the S&P 500, more on small caps, more around the globe. Yeah, we had some rockiness. We've had some concerns. Oil spiked, all the different stuff that's going on out there. I mean, Middle East turmoil, which doesn't seem to be going away, unfortunately. Still, from an investment's point of view, the stock market looks pretty good, and we've laid out before why there's a lot of waves that are still out there riding the wave. We're still riding the wave of this bull market with an economy that looks pretty good and maybe going to get a little better second half of the year if the labor market improves, which is kind of our base case. With all that, everybody, this is the very latest Glass Half Full. How's the economy doing? I think it's doing pretty good. We'll see you by next week. Take care. Thank you.